let's go. Hello everybody. I thought we'd make a gradual start. So as usual, welcome to this week's market outlook for next week and catch up on what's been going on over the last week. It's been, I suppose, a pretty crazy 7 days in markets. We'll get into it in a second. As usual, the way this works, we'll have a quick look at what to expect for next week in terms of announcements. Then we'll jump onto the platform. We'll look at major markets. Then we'll go back in and I'll go into the questions and take a look at any markets you want looking at. I thought we'd just have a quick look before we get into it. The Nasdaq, we had non-farm payrolls announced about an hour ago, isn't it? 1 hour ago. And it's the US monthly unemployment numbers. The market expectation was for 550,000 jobs to have been added in the US economy last month in November. So 550 was the expectation, 210,000 was the actual number. You can see the reaction. This is the Nasdaq out of hours. So the Nasdaq jumped about 90 points on the news. And you might think, well, why is the stock market jumping if there are fewer jobs being added than expected? And it's because it may make the Federal Reserve, the US central bank, think twice about reining in or taking away some of the support it's been given markets. So I thought it was really interesting bit of news over the last hour that we've had out. Plus, of course, a week ago we had the start of the the Omicron, however you pronounce it. That came to markets awareness just over a week ago. We saw last Friday the biggest falls for 2021 for Dow on Friday. Last week, I think that was exaggerated by the fact it was a half day because of Thanksgiving. Then this week we had Federal Reserve Chairman Jerome Powell saying that perhaps they should retire the phrase transitory when it comes to inflation. So clearly more worried about inflation now than they had been all this year. We've been mentioning this on numerous occasions. I think that inflation is going to be a much bigger problem than central banks thought it would 6 months ago. So let's see. But, so we've got this new strain of the virus and increased concerns about inflation and disappointing job numbers today. So a lot has gone on over the last 7 days. What I thought I'd also do this week in response to some questions I had via email, I talk about the trades that I've got open at the moment. So I say that, some of the markets that I trade are never really that popular, so we don't cover them on YouTube. We look at gold, silver, oil, but I think there are lots of other markets out there. So I thought as part of today as well, in response to a couple of questions, I'll show you some of my open positions, the P&L, and we can have a look at some of those markets, and why I'm in those trades. So before we get into all of this, let's just get into the risk warning. It's important to understand it's only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of the comments today and for any consequences that result. So it's not trading advice. If you're following what someone says on YouTube and risking your money on it, good luck to you. We all need to do our own research. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, a quick look at next week. It's a busy week next week. I think it'd be interesting because a lot of what are hot topics in markets at the moment, we've got news out about next week. So next Tuesday, Australian interest rate decision. Interest rates very much in focus with inflation concerns continuing to get ramped up. European, continental Europe, GDP number on Tuesday. How well or not is the European economy doing? Wednesday, Canadian interest rates. Again, another interesting one. Thursday, Chinese inflation, early hours of Thursday morning. And next Friday, UK GDP. to the UK economy. So some big numbers coming out next week. So it'll be interesting. I think December can always be a bit of a funny month, I think, because we're all, I'm amazed it's December anyway, but we've all got perhaps one eye on Christmas and the holidays. So perhaps we can see volumes drop off, if not volatility. I think we've had an awful lot of volatility over the last week. So we could see volatility pick up. Personally, I am not looking to put on a whole load of new trades in December, but I'll talk about that as we go through. I think I'm quite happy to let it pan out and have a look, come back to it in January. Contact details, etc. Capital.com to find out more about the company, the trading platform. Download our app. David.jones@Capital.com. If you have any questions after this, drop me an email. At Jones the Markets is Twitter. I don't tweet much, but that's what I am on Twitter. JonesTheMarkets.com to find out more about me and the training course I run. And of course, follow Capital.com on YouTube, Twitter, and Facebook. So you're watching on YouTube now. If you haven't subscribed to our channel, if you click on subscribe, in addition to these weekly live streams, we put up lots of pre-recorded videos. We're just doing one at the moment. It's got some really interesting data on the whole Wall Street bets meme stock frenzy that we saw at the beginning of the year and at various points throughout the year. And I'm not going to take away the thunder from that video, but there are some fascinating stats in there. Like, how well would you have done investing in meme stocks versus just drip feeding money into an S&P tracker? So if you're subscribed, you get notified when we put these videos up. There's a Facebook metaverse video, I think, going up over the weekend. So we spent a lot of time on that. So interesting viewing. Make sure you subscribe to the channel. But anyway, let's get into it. So first of all, what we'll do. Oh, this market's coming off. This is why I always say trying to trade the payrolls is crazy. I never try and trade the payrolls. This is when the payrolls number came out. The Nasdaq was at 16,030, went to 16,120, and here we are at 16,000. We have the famous headless chicken thing going on with the payrolls, which is often the case. The market thinks, oh, this is great. Oh, hang on a second. No, it's not. Or maybe it is. Oh, no. Just nuts. I think I always try and let things settle down. Saying all that, I do have a Nasdaq trade on at the moment, a short-term Nasdaq trade and a longer-term Nasdaq trade. I'll talk more about my longer-term positions, but I did a trade on the Nasdaq earlier this week, and it's flip-flopping around. This is in my own account, flip-flopping around in profit. I bought it, when would it have been here? The 2nd of December. So it was only yesterday. But I bought it because it broke below the low from earlier in the week, Monday, when the market really tanked. So I bought it then, because I thought, well, maybe this break is a bit of a false break, and put a stop loss down, quite a way away actually. And it's been in profit, and it's still in profit at the moment. But I do wonder, and I don't know, of course no one knows, have markets, are they overreacting a bit? We'll find out. We'll see what happens. I think clearly the virus and concerns about inflation this week have hit markets. But let's get back to our big picture view for the Nasdaq. So here we go. This is the Nasdaq 100. This is the big trend going back to the March lows in 2020. We've seen, if we zoom in on what's been going on, so we saw fresh all-time highs only a couple of weeks ago. Nasdaq up at 16,770. Yesterday, it went below 15,800. So we've seen a 1,000-point move off those all-time highs in November. But it does show you, or for me anyway, my trading style is to give the market room to prove me right or wrong. I think we talked about a stat last week that I was absolutely amazed by. We did some analysis of clients' trades over about a year and a half or so. Almost 50% of trades were closed out in the first hour, which I think is absolutely nuts. But, it's not my style of trading. But, if we look at this move in the Nasdaq, this 1,000-point sell-off in the Nasdaq, in the great scheme of things, it's still in that trend. So for me, the one trade that I am thinking about doing next week is adding to my Nasdaq and S&P positions, depending on what happens today. We'll see what happens. So for me, we've seen this market knock back. There's still lots of support. We've got all these pockets of support. We've got the trend line support. about 800 points below where we are now. We've got these are major lows for me in October, down at 14,380. Again, a long way away from where we are now, 1,500 points away from where we are now. But for me, when it comes to US stock market indices, my approach is still very much buy the dips. No market moves in a straight line. We get volatility. At the moment, I am treating this for my own trading as a buying opportunity, but that is conditional on the market today not taking out yesterday's low. So if it doesn't take out yesterday's low, I'll probably be a buyer on Monday. We'll see how it goes. Looking for, a swing in the days and the weeks to come. But let's see what happens. So for me, it's been an interesting week, loads of volatility, but it doesn't change that big a trend for me at the moment. If I look at the S&P, pretty much a similar view on the S&P. There we go. The S&P actually came back close to that trend line. There's that trend line. I think I've drawn it a bit different. Where would we draw? Where would I draw? I suppose that is a fair enough trend line after the noise off the March lows. But if I took it off the March lows, it's going to look something like that. If I took it off the March lows. So again, for the S&P, we're still in the trends. For me, anyway. Your views may differ. But the market hit all-time highs again a couple of weeks ago, up at 47.50. It's dropped. It had dropped to 4,500 this week, so a 250 point drop. What's that? About a 6% drop in the S&P over the last couple of weeks. But for me, we're still in this trend. Again, for me, the really important lows back beginning of October ahead of 42.50. If we broke through 42.50, I definitely think this trend is in trouble. But for now, in this market, for me, the approach of buying the dips has been well rewarded over the last year or so in the S&P. So this is another one for me to watch next week and see, do we see the buyers come back in? Let's do a quick trip around some of the other stock market indices. Then we'll have a look at some other markets. FTSE, I don't follow the FTSE myself. I think I've said it before. I trade it now and again, but not very often. But FTSE, there we go. If we picked up on the trend for this year in the FTSE 100, we've had a great buying opportunity. If we put our TARDIS trading head on, so we go back in time, we should have bought it about 4 days ago. So it came down to 7,000. That was the support. I think that was a good trade down there. I think anywhere below 7,100 was an interesting trade because we had big support, really big support in at 6,800 for the FTSE from July and September. So again, for me, pretty volatile. The things move 400 points, which the FTSE is a big move, relatively big move, as you can see, to what we've experienced for a lot of this year. But for me, that trend is still up in the FTSE. The DAX is an interesting one. We'll take a look at the German market now. I think the DAX, is a lot more volatile, or feels a lot more volatile sometimes than some of these other markets. The DAX had been coming off before US markets, but it traded as high as 16,300 in the 19th, and it dropped to 14.9. So we saw a 1,400 point move in the DAX. So what's that? Maybe off the top of my head, maybe about 8-9% move in the DAX. It took out the trend line, but again, I think it's really interesting, the DAX, that from a chart technical support point of view, we've got this level in the DAX that's been in place since May of this year. So what's that? 7 months nearly. 14,800 has been a real line in the sand for the DAX. And just this week, the market traded down to 14,912. So I think it's another interesting one down here. But I do think if these levels start to go, it's a much more different market sentiment to what we've been used to. I do think next year is going to be a lot trickier than this year because of inflation, because perhaps of the ongoing coronavirus situation. But I think inflation is definitely going to make things a little bit difficult next year, a little bit different, I should say, not necessarily difficult. So let's see what happens. But the DAX for me, still positive. It has fallen out of its trend, but 14.8 has been big support. And finally, the Nikkei. That's what I want to look at, the Japanese market. Let's have a look at that one. It's been a funny, been a funny year for the Nikkei, to be honest. I think I was saying in the summer, it was one of my oldest trades, the Nikkei. I think I had a trade in the summer running on the Nikkei that I'd put on in December of last year. And the Nikkei started the year so strong, continuing this trend from April, really pushing out in February. And then it's just gone nowhere, for nearly 10 months now, isn't it? The Nikkei. Lots of support at 27,000, So again, if we were watching that as a level over the last week, I think there were opportunities off that level, but pretty much range bound. Not saying it's not tradable, but for me, 27,000 is the big level in the Nikkei. Right, let's take a look at oil. I mean, oil has been absolutely clobbered this week. Really, I think I saw someone put in the chat, they were really struggling with oil this week, and I don't blame you. I'd be the same. I mean, it's just nuts. Oil, I think, in terms of volatility, or over the last couple of weeks. We had in was it October? So October, the market trades up to $85 pretty much, and yesterday the market's down at 62.50. What's that? It's 30%, isn't it? It's not quite 30%, but 20% plus. What's it? 85 to 23, 2017. It's not far off a 30% move in about 6 weeks in oil. Absolutely crazy market. It's not been a good market for me this year, oil. I think I've been wrong-footed a couple of times. I've done much better on natural gas. So we'll take a look at natural gas in a second. But once again, the moves in oil. I've just seen the CrowdStrike comment. We'll go into that later. The moves in oil have taken out this trend. In oil. I'd be tempted to give it one last go though, to be a buyer with a stop underneath the August lows, which are coming in around about $62. But I mean, it's just an absolutely crazy market over the last couple of months. So difficult market for me to trade when the big trend is up, but we have been in for 6 weeks in a downtrend. It's a tricky market, but I'm always willing to give the bigger trend, and for me, the bigger trend over the last year and a half or so is still the uptrend. I'm always willing to give that one last go. So let's call it 61 is maybe the level to watch for oil. But massive volatility, isn't it? So crazy markets. But and a really interesting one to watch next week. For me, for my style of trading, stock markets are the more logical trade for me. But I think oil will be interesting to see if that 61 level can hold. But again, a bit of a perfect storm for oil. Concerns about inflation affecting economies. But I think that perhaps the bigger mover for oil has been the new strain of the virus this week. Because we know, we've seen. I was just talking to my son earlier. So we've got lockdowns in Austria. I think he was saying Netherlands is there, and Germany, they're doing what's effectively a lockdown for unvaccinated people. So, it's creeping back out through Europe, continental Europe again. Who knows where else it's going to go next. And of course, if we have lockdowns, it affects the world economy, and anything that impacts the world economy normally has an impact on the price of oil. So there you go, that's oil. Now, natural gas, I did do a video. There's a video on the channel yesterday for natural gas. And I think it's another it's been a great market for this account this year, natural gas. So just if you've never watched these before, this is an account, a Capital.com account that's got real money in it. It's got Capital.com's money in, and I use it to do trades on the videos we do on the channel. Then I've got my own separate account for my own stuff. Natural gas has been a great performer this year, and it made some good money on some trades this year on this great trend up. But I have been wondering over the last couple of months in the videos that we've done, was everyone too bullish? It was really hard. I remember when we were recording videos here, October and November for natural gas, it was really hard to find negative commentary. There was lots of commentary out there expecting just the price to continue higher. And I touched on it in the video yesterday. So if you haven't seen it, just watch that. That when you get extremes in sentiment, from a media point of view where everyone's saying the same thing, that's precisely the time the market does the opposite. And I think this is what we've seen in natural gas. I did have an order in to try and get short on the way down. missed it, didn't get filled. Absolutely pretty clobbered again over the last few days, natural gas. Another one that has massive moves. You know, that the high on the 26th of November was $5.50, give or take, and it touched $4 yesterday. 30% move in about a week and a bit in natural gas. So for me, it's not one that's a trade at the moment. I think it's another one to trade next week. If I absolutely had to do a trade on natural gas, I'll probably be a buyer to see if we get a little squeeze back up above 5 again. And the levels I would watch is really ahead of these old lows from August before it really sort of went a bit crazy, down at 372. So I think that's another interesting market to watch next week. And if I, like I say, if I really had to do a trade, I'd be a buyer. But I think it's for me, clearly a much harder market to trade here rather than here, when we're just in a lovely little trend and it's selling off, then it's pushing higher, and it's all just sit on it and ride the trend higher. Much more volatile over the last few months. But I think one to watch next week, the old gas price. Let's take a look at gold and silver. I just absolutely hate these markets this year. I mean, gold's a strange one because, you know, gold's a really popular topic on our channel. So we always do a video on gold, you know, every couple of weeks because we know people want to see it. But I've done, I think, one trade on gold this year in my own account that is still running. It's been running for ages and it's not doing anything. But it's not a market I would trade this year. And because it's just so sideways, you know, I want a market like the natural gas we saw, or like oil, or like the S&P that's actually moving. But I think this has just been, you know, a difficult market for me this year. And we've got two positions on at the moment in gold, and they're both losing money. So the trade just 22nd November filled at 18.20, so stops in place. So I'm not too worried about them, but really, you know, it's like this trend here. This trend in gold we've had since August builds the trend up, and then bang, we've fallen out of it again. You know, again, going into next week, I think it's interesting because we've got a lot of support from 1740 to 1760. But you know, definitely not my sort of market this year, gold. So I still think more up than down from here. You know, and if someone said over the next 3 months, is it more likely to go $100 up or $100 down? I'd be leaning towards $100 up. You know, so I'd still be looking to see if it can regain this recovery that's been in place since August. Plus, we've got inflation perhaps fanning the fuel, the flame here of perhaps gold bulls. So we'll see. But really, just not a market for me this year. Like I say, I've traded it once, I think, in my own account. I've still got that trade running. We'll have a look in a minute whether it's at profit or loss. And it's just a bit of a tricky one. I think there are easier markets, or there have been easier markets for me this year. If I hate it, time to buy. Silver's another one. Silver. So it's interesting. Yeah, well, it's interesting to me anyway. I'm a big fan keeping records on stuff. Last year, natural gas on this account, whatever I did with natural gas, the market would do completely the opposite. So I'd buy it, it'd go down. I'd sell it, it'd go up. And absolutely dreadful market on this account last year for natural gas. Natural gas this year has been one of the biggest winners. And silver has turned into the bogey market for me this year on this account. Again, I think I've done one trade in my own account in 2021 for silver. And I got out of it back here, back in Feb. I've not traded silver in my own account for 10 months. We do trades on this because it's another popular one on the channel. But it's another one that it seems to sort of like here, you know, I was wondering here, the moves we've seen in October, November, are they the start of a reversal finally of this trend in silver? And it's all going well, and then bang, it's absolutely tanked again over the last 3 weeks, and the price has dropped about 10% or so. I think it's interesting down here because 22 or thereabouts has been good support. So it's another one to watch this week. But for me, it feels like still a scrappy market, silver. So not one for me. I know there are people out there who are big fans of it, big buyers of silver on dips, you know. But if you look at it, it's just been a rubbish year for silver. You know, where did it end 2020? Ended 2020 at $26.30. We're down at $22.30 now. So it's dropped about 15% this year. Silver, I am not a fan. And again, the video I was doing, I think we did one earlier this week on silver, I read some analyst commentary from a reasonably respected analysis business saying $35 by the end of the first quarter next year for silver. Absolute lunacy, I think. I mean, clearly it's opinions that make a market, but I don't see why we are going to see silver 50% higher than here in the next 4 months. Let's see, but I wouldn't be buying that bit of analysis at all. Right, we've looked at some stuff. Let's take a look at the cryptos. I think the cryptos are boring, at the moment. I think Ethereum looks the better of the two. I learned this week sorry, that's Alexa talking to me. I learned this week that ETH, which I always thought was pronounced ETH, is actually ETH, is apparently how you're meant to say it. So every day's a school day. But here's Bitcoin. So Bitcoin, I had been said, in recent weeks when we've looked at this, it always struggled up here, or it has done for much of this year. Whenever we have seen Bitcoin above 60,000, if we go back to when it was really booming, the beginning of the year, we had that great run, from November at 12,000 for Bitcoin up to 60. But it always seemed to struggle above 60. And I just wondered, even though we had this breakout to all-time highs again in November, could it actually build on it? And it hasn't so far. So it pokes out, and we did see an all-time high again, which is bullish normally, up nearly at 69,000 beginning of November. But here we are now at 56, and it just feels like a lot of the momentum had gone out of the crypto market. It's trading now where it was the middle of February of this year. So if you've been hodling Bitcoin, you've not made any money for 10 months. Have fun staying poor, as they say. It's just gone sideways. Should have bought the S&P. Should have bought that. I wonder. I wonder where it's going to go next. But it's still, for me, it just feels a little bit lacking direction and lacking momentum. So perhaps we'll just see it drift off from here. It almost feels like it needs to have some major news impact. Ethereum, or ETH, or ETH as I call it, whatever it is, who cares? It's just numbers on a screen, isn't it? It's not real. I think that looks a bit more perkier than Bitcoin. I should say I do have one trade on Ethereum and one trade on Bitcoin open still. I closed some of my Bitcoin stuff, two of my Bitcoin trades when it came off from the highs. But I did think about, is it worth adding to it? Ethereum seems to be holding up a bit better than Bitcoin. I wonder, will we see Ethereum break out to all-time highs again before the end of the year? Let's see what happens. But I think Ethereum looks more interesting than Bitcoin next week, I think, or over the next couple of weeks. And for me, 4,860, the old all-time highs, is an interesting one to watch. So let's see what happens. But it's a little bit lacking excitement, the old world of crypto. And if we go back to our more traditional fiat, dirty currencies, which are going to be replaced anytime soon by all these ones and zeros. Another weak week for the pound against the dollar. So if we have a look at this, look at where we are now. The pound, was that last Friday, did spike down to its worst levels since December last year. So almost 12-month lows on the pound. I would have thought a month ago, 2 months ago, we'd see recoveries in these currencies against the US dollar, but we haven't. Still weak, still pushing lower. If we take a look at euro against the dollar, euro, US dollar. Let's wait for that. It's not as weak as the pound. And again, I think I was highlighting this level last week, wasn't I? The lows from June of 2020. It was pretty big support. 111.60, 111.50 was pretty big support, and we have seen it hold above here. But I think if we really thought the euro was going to reverse, I think there's plenty of time to sit on our hands and wait to see if we do see actual real support down here. So I think the euro looks more interesting than the pound. The pound still looks really weak. But let's see what happens. So what I'm going to do in a second is the usual thing where I dip into the questions and we have a look at any markets you look at. But I thought what I would do, like I said at the beginning, I had a few email requests for this sort of thing. but to talk about stuff I'm trading and that I've got open trades in. Because I said, even though gold and silver are really popular, I've not traded those hardly at all. I've got one trade in gold. Last month, November, was I think it was my second best month this year, thanks to a couple of markets. So I thought, what I'm going to do now, I'm going to show you. I'm a big fan of keeping records. I'll show you my open positions, and which will maybe give you a feel of the style that I trade. So I'm a big fan of keeping records, pulling out data and taking a look at it. So the stuff that's making me money at the moment, the dollar index, we'll take a look at the dollar index. Oh, so my biggest open profit at the moment is in the dollar index in my own account. The QQQs, which is a Nasdaq tracker, is another one for me. I took some profits on my S&P trades. And coffee. Coffee is my second biggest open profit at the moment. Dollar against the Canadian dollar is doing well. And I think what's interesting here, and doesn't surprise me at all, I've got more losers than winners. My open profit at the moment on my own trading account is about 2.5 grand of open positions. But I've got twice as many losers as winners. But it goes back to what I say time and again in these sessions. It's not about being right all the time. It's when you're right, it's making much more than you lose when you're wrong. So my biggest loser at the moment is platinum. We'll have a look at that. So let's take a look at the dollar index, platinum and coffee as markets I am in, and they're markets we don't look at very often. So let's take a look at the dollar index first of all. So I'm a big fan of adding to positions. The dollar index, I've got 3 open positions on the dollar index at the moment. The oldest one I've been running, I think, since about February of this year, and I've added into it. And clearly, one of the big reasons November was a good month for me was because the dollar really took off. So I think the dollar index is probably a much more useful market to watch rather than watching loads and loads of different currencies. I think if you don't want to watch a load of markets during the week, which is fair enough, one of the markets you should watch is the dollar index. And it's been a fascinating year. I remember saying at the beginning of the year, is this going to be the year for the great US dollar comeback? So I did sort of have that in my head coming into this year. It took 6 months to actually really get going. We came back, this was big support from January, 89 was big support, came back to it in Jan. And the market's moved about, 10% higher, 8% higher since then. So, and a great trend. So I've added a couple of trades in on this trend. I'm in, it's my biggest position at the moment in terms of the financial exposure I've got. And it's been a great market. It's traded up to, in November, hit its best levels, the US dollar, since July of last year. So we saw 12-month plus highs in November. It's been a really interesting market. I'd still be a buyer on dips for the dollar index. We can see a bit of a bounce back over the last few days. And for me, only if it breaks back these old lows, about 93.70, maybe even 93, would I think the dollar index trend has changed. But it's been a good market. Eventually, it's come good this year for me, the dollar index. And, the whole thing, why I felt that way was this trend breaking, this trend from the March highs, 2020 highs, when the dollar really ran higher because of concerns about coronavirus. Then everyone embraced risk again, the dollar sold off, and then bang, we have turned it around this year. So it's been a really good market for me, the dollar index. Let's take a look at platinum, which is a trade I did and I still got running from last month. And I think it's my biggest open loser at the moment. And I still think it's a valid trade down here. I'm guessing I bought in here somewhere actually. Or maybe here. That looks like more my sort of setup. But again, for me on platinum, over the last couple of years, it's been a good market to trade because it's been good trends. And I just wondered, were the moves we were seeing in October and into November reversing this downtrend? So I was a buyer. My stop loss is actually the other side of these lows, these September lows. So I've got a wide stop loss. But I think that's another interesting market to watch next week. I'm in the trade. I'm underwater at the moment. It's gone about 70% towards my stop. So I've still got a bit more leeway. But I think it's another one to watch next week. I think it's been hit by perhaps concerns about economy slowing down, concerns about, or a stronger US dollar has hit it. Does it get a bit of a move on next week in a recovery back up to those November highs? Let's see. I think it's been an interesting market to watch. And coffee. This coffee, I think we touched on some of these commodities this year. This is why, I was saying a few times over recent months, I don't think inflation is going to be transitory, because so much real stuff like coffee, like cotton, like oil, like cocoa, like sugar, so much real stuff has gone up in price a lot this year. If you look at coffee at the end of 2020, so a year ago, whatever it is, a sack of coffee or a pound of coffee, whatever it is, was $1.25. Today, it's $2.42. So the price of coffee has almost doubled in the last year. And that all this stuff, all these raw commodities, agricultural commodities, have really gone up in price. And that's why I think we'll have sticky inflation. But anyway, it's been a great trend. It's been another great trending market for me, for my sort of approach, buy the dips in an uptrend, that sort of thing. I think I put positions on various points of the way up, a couple of trades. I think I bought back in here somewhere, and I think I'm still in that trade, and I added on the break up here. So I've got a couple of open positions in coffee. It's been a great market. It's been a bit of a runaway market at times, and you never know really how high it's going to go. But at the moment, coffee is trading at its highest levels since 2011. So we're at a 10-year high on coffee. But it's been a really interesting market. And I think it's been a really good... I think you always learn stuff when you're trading, and it's been a really good lesson for me over the last few years to make sure I look at a broad mix of markets. I look at the S&P and the Nasdaq every day. But I also look at markets like sugar and wheat and coffee and cocoa and natural gas and oil and the dollar index and gold and all that sort of stuff, because you never know where the profits are going to come from. Like I said, natural gas was a horrible market for me last year. It's been an absolutely great market this year, so you never know where the profit's going to come from. So I would not want to just look at the DAX every day. I'm trying to trade for the bigger swing here. So a market like this that's doing this sort of thing, it's been an absolutely brilliant market this year. Perhaps things will change next year, but there'll be something else that's moving. Right, let's jump into the questions. Before I do that, I'll just bring up the contact details again. There we go. So to find out more about the company, Capital.com. Any questions, drop me an email, david.jones@capital.com. You can follow me on Twitter @JonesTheMarkets. Find out more about me and the training course I run, jonesthemarkets.com, and follow Capital.com on YouTube, Twitter, and Facebook. Right, let's have a look at some of the markets you want to look at. So I hope you found that useful, just looking at some of the stuff that I'm trading at the moment. And like I say, probably the only stuff I'm going to add this month will be some S&P and Nasdaq if the market holds up. But let's have a look at those in a minute. Right, we looked at crude oil, euro, Swiss franc. Let's have a look at that. So we take the US dollar out of the equation, the old euro chuff. Well, that's really just nosediving, isn't it? So what we're seeing here is euro weakness and Swiss franc strength. My God, that's been a great trade if you manage to get on that, isn't it? That break. I must admit, I do have a bit of a problem trading sort of breakdowns and break ups, but that was, that break below, what was it, 105 near enough, and the market almost just sold off in a straight line, didn't it? So where are we from a historical point of view? We only have data, we don't have that much data going back on euro, Swiss franc. Let me have a quick look if I can look at it somewhere else and see just how low we are on this thing. So for me, I would still want to be a seller of strength. So this is the lowest the euro has been since 2015. So we're at 6-year plus low. So I'd still want to be a seller of strength for euro, Swiss franc. If we got a decent rally from here, but it has been just one-way traffic, isn't it? So it still looks pretty weak, making new lows for that down move today. So yeah, not that good at the moment, is it? Still weak. Natural gas, we looked at that. CrowdStrike. So Nick, the biggest CrowdStrike fan on YouTube, says that the trend may be over for CrowdStrike. Surely not. I'd be tempted to give it another go. I think not today. That's a massive move, though, isn't it? I mean, looking at the numbers, the thing has gone from $300 nearly in early November to below 200. Now, big moves in these stocks, aren't they? 30% move. I think it would be interesting. I wouldn't do anything today, but I think it'd be interesting to see what happens if we push back to these old lows in this whole 167 to 180 area. So for me, that's all. It's almost like I have a trading methodology for some charts. That's like a last chance trade. Okay, they've fallen out of the trend, but perhaps it's a bit of a short-term aberration. So give it one last go to recover back into the trend. For me, the stop would go the other side of 167. But let's see. Let's come back to it and see what happens. But still pretty weak today. Tesla. Let's have a look at Tesla. Tesla. Where are they? I mean, Tesla, that big trend is up. I mean, that's been it. That was a good... We had a trade running on Tesla in this account for months this year. Came out of it on the volatility in November. But for me, the trend is up, so I want to be a buyer of dips. The only question is, it's the eternal question, isn't it? How much of a dip do you wait for before you buy in? And I thought when we saw that volatility, I could be a buyer at 1,000. And I suppose from a short-term trade, again, I wouldn't be a buyer today because it's pretty weak, but we've got short-term support down at, let's call it 975. If they take out 975, I think we could see a much deeper sell-off. That, for me, is the better buying opportunity within this overall trend. So pretty volatile month or so for Tesla, isn't it? But the big trend is still up. So it's just about how patient do you want to be to wait for buying a dip, So let's see. Let's keep coming back to it. But I do really want to buy some Tesla shares. I think I did say, whenever, it was a couple of years ago, I bought some and then sold them after about 4 months. And I've never got back in. But let's see what happens. What's your view on MasterCard and Square? And of course, what's his name? Jack Dorsey is resigning from Twitter, isn't he, to go back to Square. But let's take a look at the company he founded. At the moment, he's chief exec of both, isn't he? But he's resigning from his Twitter role to go and be thingy. MasterCard is a bit boring, doesn't it? I think it's a trade, isn't it? It's a bit sideways this year, isn't it? Lots of support running from 280 to 310, which is where we are now. If I absolutely had to do a trade, I'd be a buyer at the moment and put my stop below 300. But it looks a bit boring, doesn't it, at the moment? What else did you say? Square. Someone said the Nasdaq was tanking. Let's have a quick look at the Nasdaq in a minute. Well, that's Squarespace, isn't it? That's not Square. Do you mean Square or Squarespace? Did we cover both of them? Square. There it is. Square. There we go. That's a bit sideways as well, isn't it? I mean, again, it's another one. Okay, it's just yesterday and today pushed to its worst levels for a year. So again, you could be perhaps, let's wait and see if it stops tanking and be a buyer on the assumption it's overshot. But yeah, that would be the trade to do, to watch how does it perform if we start nudging towards sort of 150, 165. So perhaps one to keep an eye on next week, but not one for me, that one. I much prefer the Apples of this world. I do have a trade on Apple. And I did see it pushed out to fresh all-time highs again this week, despite the carnage. There we go, fresh all-time highs. So for me, I'd much rather look at a trender like that than a sideways one, like those two, personally. But there we go. Can you take a look at Rio? I'm guessing do you mean Rio Tinto? Rio Tinto? Yeah, it must be Rio Tinto, mustn't it? Why don't Rio Tinto? So the mining company. That is not a pretty chart, is it, over the last 8-9 months or so? So it's not good, is it? For me, I'd rather be... I think if I had to do anything, I mean, it's got clobbered quite a bit today, isn't it? 5% down today-ish. I still be probably a seller rather than a buyer. I suppose it's interesting down here. See what happens if it edges. Well, does it start making a base ahead of these old lows from a year ago? But it's another one where, I think the good trades jump out at you, like Apple, for example. For me, the good trades jump out because there's a trend there. This one, I'd be a bit sort of hummy and hurry. I think it's an interesting one to maybe come back to in a month and see, is it finally going to break this downtrend it's been in since May of this year. But for me, I like to have a bit of momentum behind me if the thing is trending higher. Nasdaq just fell hard. Let's have a look at Nasdaq now. Let's have a look at that. Let's see what that's doing. Nasdaq 100. Oh, it is there. Let's have a look. Well, I don't think I'll be buying that on Monday. This does look quite weak again now because you can see it. This is a daily chart, but we're breaking below yesterday's low. So I think that trade I put on is probably going to be underwater by now. Yeah. It's interesting that. And it's Friday. If we continue to push below 15,800, that's quite a weak finish for the week. So the fact that it's pushing to new lows for this down move means it's not a trade for me on Monday because it still looks pretty weak. The trend is still up, but I think I'm going to have to sit on my hands for a little bit longer for when it comes to buying any more Nasdaqs. Let's see how it finishes today. Let's have a look at the S&P actually. Let's have a quick. Is the S&P doing the same sort of thing, or is it just more of a tech stock thing? Let's have a look at that. Okay, the S&P is holding up so far. So this is the hourly chart of the S&P. It has traded 45.40 today, but the low earlier in the week was 4,500. So it seems like there's a bit of a tech stock rout going on today. Can we do Lithium Americas Core? I have never heard of those, but we'll take a look. American Lithium Corporation. What do they do? I'm guessing they dig lithium out of the ground, don't they? An exploration stage company engages in the identification, acquisition, exploration, blah, 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 of resource properties. Now, it's clearly, I'm guessing it's only just come to the market, hasn't it? And as I always say with these, there's not enough data to go on, and it's too volatile for me. So the thing at the end of November, this is only an hourly chart. If we make this a daily chart, it's going to be even crazier. So at the end of November, it hit $41. Today it's below 33. So it's moved 20% in 3 days. So it's not one for me, and there's not enough data. So it's, for me, there's just nothing to go on. So, it's just a crazy one for me. I need a bit more data. I need the volatility to calm down. But whatever you do with it, good luck with it. But I don't like stocks that move 20% in 2 or 3 days. In an uptrend, you buy on dips. In a downtrend, should you sell on spikes? Definitely. If you've got a market. And I've missed the trick with it this year with the euro against the dollar, for example. If you have a look at that, euro USD. Selling the rallies. It's like an uptrend just turned upside down, isn't it? So if the market's trending lower, we want to sell into strength in a downtrend. There's a really interesting trend line on the monthly with pound dollar going from the financial crisis, Brexit, and Omicron. So a look at that one there. We don't normally look that long term, but I think it's always a good idea to have a look at the bigger picture. We only got weekly charts here. Let's see. So we don't. Oh yeah. When was the referendum? 2016, wasn't it? 2016. So I don't know. Are you saying sort of that? Oh, I see. That sort of. Is that what you're looking at? Maybe not. I don't know. But it's always hard, isn't it, to describe what it is that you're looking at if you're trying to put it in text. Euro Aussie has been a great market the last few weeks. Let's have a look at Euro Aussie. I must admit, I don't look at these mix of markets, but maybe I should. But that's a massive support, isn't it, on Euro Aussie? That's really look at that level. That whatever it is, 152.50 level has been enormous, and it's rallied. Oh, we're looking at the weeklies, aren't we? What am I talking about? Sorry, it's dailies. It's a massive level anyway, but that has been enormous support for Euro Aussie. So yeah, you've done well if you've been in that. That is again that if I actually watched that market, that would have been a good trade for me. I would have hopefully have bought the pullback here, and then it's great when you get into a position and it takes off. It doesn't happen very often, but it makes the management of the trade a lot better. So that's been a really good market. Nice one. We'll have to maybe keep a more active view on that. Salesforce clobbered this week. Let's have a look at those. The old CRM, isn't it? Customer Relationship Management software clobbered this week. And that's another, for me, that's another interesting stock actually, because the trend had been up. We had all-time highs, I'm guessing, in November. And it, like you say, clobbered is the correct description for that one, off 20% over the last month. This is another one for me for the last chance saloon trade, really, to see, does 250 hold? I could even be tempted to be a buyer today. Let's do it. Let's buy it. We've got this old support down here at 250. It has just about held over the last couple of days. So despite there being a tech rout going on in the Nasdaq, let's buy Salesforce. Let's go 240 for a stop. Can we go 240? Yeah, 240. So the thing needs to really get a move on from here. We normally risk 100 quid on these trades. Let's do that on the live stream. So we're going to buy 9 at 255.6. Stop at 240. It's maybe a bit too tight, the stop, but who cares? It's December. And the risk is 100 quid. Let's go. Bang. Done. So I think that is, for me, it's an interesting trade. It's fallen out of the trend. We had big support back here. Has it overshot? I think we'll find out pretty soon on that one. So let's see. Let's see if those old lows at 250 hold. So that was an interesting market. We looked at Euro Aussie. Yeah, if you joined late and you missed anything, once I stop doing this, which will be in about 10 minutes time, you can play it back straight away. So we covered oil and stuff like that at the beginning. What is your advice to new trader? Do you know what I'd say? Watch last week's live stream, because we spent a little bit looking at mistakes people make, and that some of that mistakes from memory, people don't trade with a stop loss. So you should absolutely have a stop loss. Absolutely have a stop loss on a trade. People add to losing positions, don't add to losing positions. And about 50%, almost 50% of trades appear to be closed out within the first hour, which to me is utter lunacy. You're not even giving the market time to prove you right. So have a look at some of that stuff. But just I'm a big fan of taking a bigger picture view. On these things, on these live streams, and on the pre-recorded videos I do, very rarely look at 5-minute charts. I think 5-minute charts, utter waste of time. So for me, much more interested in the bigger swing, which is why, eventually, like last month, ends up being a good month, because I'm trading the bigger swing in markets like that. I'm not worrying about where is the Nasdaq going over the next 20 minutes. Try and position yourself for the bigger swing in markets. Trading does not have to be stupid short term. New Zealand dollar, US dollar. Someone saying they're short. I was short. I closed it out last month. Oh, it looks like I should still be in it. It's good. I got closed out. I dragged my stop down really tight. So I got closed out. It was my best trade in the end. I closed last month. I got stopped out here. But that's really turned again, isn't it? New Zealand dollar, US dollar. More dollar strength again. That looks really weak. Interesting one to watch. There's lots of support, but it's 150 points below where we are now. So I think that's an interesting market. That I definitely got out of that too early. But what can you do? It's the way. You never sell the top or buy the bottom, do you? Can we have a look at the Dow? We can have a look at the Dow. We don't look at the Dow that much. I think the Nasdaq, not the Nasdaq, the S&P 500 is a much better market than the Dow. The Dow, big support, 33,500, the October lows for the Dow. So for me, I'd still be a buyer. Still be the same as with, from the daily chart point of view, looking at something like the S&P and the Nasdaq and the Dow, it's still above major supports for these markets. So personally, I'd still be a buyer on dips. Can we have a look at Alibaba? Is it still falling? It just seems to have been, isn't it? Look at that. It just seems to have been relentless all this year. So if we go back to the beginning of 2021, So it was trading around $234. It's halved this year. It's still really weak. It's a really popular stock with clients. Let's have a quick look at the positions. I bet a lot of people are long Alibaba. There you go, 96% buyers versus 4% sellers. People like it for some reason. But there's another good example actually. You know, you've got to trade with the trends. You know, a big reason that people, as new traders, lose money is they trade against the trend. You know, that trend on Alibaba has been clear now for well, at least since February of this year. You know, still pretty weak, and this is the lowest it's been since 2017. So we've got 4.5 year low. Still, it's really weak. Absolutely fallen off a cliff. That one. Is it a good time to buy SHIB? Oh, is this crazy cryptocurrency, or is it something else? Shiba, I mean, that's just, for me, you know, these, as I always say with these crazy cryptos, if you're in them and you make money, great. But this is a market that has went up tenfold in about 6 weeks, and then it's halved over the last 6 weeks. So for me, these are lottery tickets. These aren't real markets, but good luck to you if you're in them. Thoughts on PayPal? Yeah, let's have a look, because PayPal had that rumoured takeover of Pinterest and then didn't happen. I must admit, I thought PayPal was going to recover, but it hasn't, has it? It's gone sailing through all sorts of support. So for me, if I really wanted to be a buyer of PayPal, I'd still be waiting. I think if I had to buy it now, I'd put my stop the other side of 170, you know, but it has, you know, just yesterday slipped to its lowest since November of last year. So to me, it's still pretty weak, the old PayPals. So let's see. Euro Aussie, we looked at Euro Aussie, didn't we? Dollar Turkish Lira. I mean, that's one clearly that's been a lot in the news recently, with what's going on politically driving that. And I followed bits of it, but I mean, again, if you were in the trade and in the trend, absolutely brilliant. If you're long the dollar, obviously, but you know, still that dollar still looks strong against the Turkish lira. You know, I've seen that action has been taken by the government this week. I'm not quite sure what it is. I haven't followed the story closely, but clearly it hasn't really dented this US dollar strength against the Turkish lira. We've seen enormous volatility, absolutely crazy swings. For me, it's too volatile to trade that one. You know, where it's a currency pair, and in the last 2 weeks, it's moved about 20%. You know, you don't see pound against the dollar moving 20% in 2 weeks. So for me, crazy volatile market, trading a bit like a cryptocurrency, to be honest. But that dollar strength still appears to be in place, doesn't it? We did crude oil, Nvidia, yeah, the old chip manufacturer, isn't it? I think I did know AMD. I've got a trade on AMD, not Nvidia. I mean, I think we've looked at this one before, because clearly I've drawn that trend line before. And as I often say, when they start really running away, I do have a bit of a problem trying to get in on them. I mean, for me, it's still a buy. You know, the trend is still up. If we flip this over to a much shorter term chart, that trend is still up. There we go. So the trend since October is still up. If I was going to short term trade it, I would be thinking of this weakness as a buying opportunity. So I would be seeing, where's this weakness going to stop? And I would definitely be watching 290 to 300. So I think if I had to trade it, I'd be looking to be a buyer, and I'd have my stop loss somewhere the other side of 290. But yeah, but quite volatile clearly the last few days. Astrazeneca, let's have a look at that. Astrazeneca, I think has that historically been a little bit boring, or maybe not. I don't know. But clearly, you know, a lot of focus on these stocks because of the all the vaccine stuff and the new strains. I mean, if you looked at it in that sort of time period, a year and a half, it's really gone nowhere, hasn't it? I would be tempted to be a buyer. I don't think it's the greatest trend in the world, because like I say, for the last year and a half, it's pretty sideways. You know, we've got a lot of support coming in about 80. Is that 80 quid? Is it 80 pounds? So for me, 76 to 80 is interesting. I wouldn't be a buyer today because it's still weak. It's come off a lot, doesn't it? Since just over the last month, the stock has dropped about 15%. So I think it's an interesting one to watch. You know, if we get a bit of a swing back on Astrazeneca. So let's see, Euro, yen, and dollar Swiss. We looked at Euro Swiss, didn't we? Euro, yen. Euro, yen. I suppose. I mean, for me, an aggressive trade, be a buyer. That would be my aggressive trade on Euro, yen. I think it's quite interesting that we have these old lows, don't we, on Euro, yen at 127, whatever it is, 90. And all this week, it's been trying to break through, and it can't break through. So, you know, you would say, well, if a market cannot break through a level after lots of attempts, what do you want to do? And for me, I'd be a buyer. So I think it's a really interesting trade down here. Let's do the trade. Let's go crazy. Do another trade. So I would be a buyer at 127.85, and I put my stop somewhere the other side of 127.50. So it's trying to fall through. It doesn't appear to be able to fall through. Perhaps it's going to go up. Is the in-depth logic behind that trade. So let's do 127.20 as a stop, let's say. So close at a loss, 127.20, risk 100 quid. How much do I need to trade? Let's trade 24,000. There we go. Let's do it. See how that one works out. We've got a lot of losing trades at the moment in this account. The Salesforce is down £2, so that's okay. But I think that's interesting. I think if it goes below 127.50, I think we could see a much deeper sell-off on Euro yen. But it's interesting that it's struggled this week. What was the other one you asked for? Dollar against the Swiss franc. Hang on, let's have a quick look at that. I mean, it's a bit like the dollar index chart, isn't it? But not. I mean, I would be a buyer of the US dollar against the Swiss franc based on that at the moment. I'd be a buyer. The closest I would have my stop would be the other side of 91.50. I'd probably give it a bit more room and shove it the other side of 91. But for me, it looks like a buy, that one. Right, I think we are going to wrap things up there because my hour is up. So I need to wrap it up. Apologies I didn't get to your question, but we'll do it all again next week. Don't forget to go and find out more. Go to Capital.com. Download the app, open an account, open a demo account, get access to all the stuff we'll be looking at today. To any questions, general trading questions, drop me an email, david.jones@capital.com. At Jones the Markets is my Twitter address. jonesthemarkets.com to find out more about me and the training course I run. Follow Capital.com on YouTube, Twitter and Facebook. I think it's a really interesting week next week. You know, there's a lot to watch next week. Personally, like I say, because it's December, I'm not in a mad hurry to get a load more extra trades on. But the markets I am going to be watching are going to be US stock markets after, you know, the volatility over the last week. I think it's going to be really interesting to see if these trends hold and if the market has overreacted over the last week or so and we get the famous Santa rally and the thing turns round and runs all the way back up again. So let's see. I think that's probably going to be the main focus for me next week. But don't forget, if you're watching this and you haven't subscribed to the channel, subscribe to the channel, and we'll do it all again next Friday. And keep an eye out for that Facebook metaverse video that should be going out over the weekend. All right, thanks for coming along. Good luck with your trading over the next week. It's not been the easiest of weeks, definitely, but we'll see this time next week where we are with it all. And I've lost my control panel to stop YouTube.